Hello everyone, welcome back to the Intraday Expert YouTube channel. I'm Pranav, the CEO and founder of the Intraday Expert, and today we are going to dive deep into the basics of the Indian stock market. In fact, in the next upcoming video series, you're going to see all the things that you only need to get started in the markets. So whether you're a seasoned investor or somebody who's just starting out, then this video is for you. So let's get started. So today we're going to cover basically three topics. The first topic is going to be about why and what is the stock market. The second topic we're going to cover are the two types of analysis that one can do to analyze the stock prices, two types of analysis. And the third topic we're going to cover today is what are the types of trading that one can do when it comes to the Indian stock market. So hopefully you're excited for the same. So let's answer the first question, why the stock market? If somebody is now earning and having the primary source of income, then why should they worry about the stock market? You might be in a 9 to 5 job, or probably you're in a business, or you might be a working professional like a doctor or a lawyer. Then why should you worry about the stock market? The simple answer is that a single source of income is not at all sufficient in today's world to achieve your dreams and goals. And with the rising inflation rate, it becomes even more difficult for your traditional income sources like FDs and savings accounts to give you enough amount of money over the long term. So in fact, with the increasing inflation rate, the value of your money is actually going down. So it's important that you invest in assets that can actually grow higher than inflation and over a period of time start making you money in such a way that you don't have to work for the rest of your life to earn your basic bread and butter. Right? So that's the idea why you have to invest in stock market. And with historical returns, we have always seen that stock markets have outperformed any of the basic traditional investment assets. And that's why you have to invest in the Indian stock market. Not just Indian stock market in general, but Indian stock market right now is on a bull run. In fact, Nifty hit its 20,000 points very recently. So that's exactly why the Indian markets are looking very lucrative at the moment. But at the same time, it's not, you don't have to worry about the market's movement all the time. You have different investment ways and different types of trading that you can do where you can take advantage of the markets even if the market is falling or even if the market is flat. So in the video series that we're going to cover in the next few episodes, we're going to cover all of that and talk about it even more in depth. So now that you've understood why the Indian stock market or why invest in stock markets, now let's understand what exactly is the stock market. Let's take an example of an XYZ company, a company named XYZ, which wants to start and requires an initial capital of 1,000 crores. Okay, so they need this much amount of money to start the company. And let's assume the initial investors they already have an amount of 500 crores available with them. So the deficit is now 500 crores, which means they need another 500 crores so that they can start this company. But how are they going to get that? So they need investors to invest in their company so that they can get the company started. Now the next question is, where are they going to get these investors? How are they going to get these investors? And how are they going to make sure that all of this happens very seamlessly? And this is exactly the place where the stock markets come into picture. So a stock market is basically a place where investors can actually go and buy shares of companies so that they can actually make money out of the same. So let's say now there is 500 crores requirement. What basically happens is this 500 crores that is required is divided into multiple parts. Let's say it is divided into 50 crore parts, or in simple terms, shares. Now what happens? Each share is now valued at, each part or each share is now valued at 10 rupees. Now, if you want to invest in this company, you can start investing for a small amount of as small as rupees 10 rupees. Now, let's say you want to buy 100 parts of this company, then you will have to pay 1,000 rupees. And let's say you want to buy 5,000 parts of this company, then you'll have to pay 50,000, so on and so forth. So ultimately, if you want to buy the entire 50 crore parts, then you will have to pay 500 crores. So now the deficit which was there earlier is now satisfied. But to make sure all of this happens in a seamless manner, there is somebody called as a regulator. A regulator is basically an intermediary that makes sure that all of this happens seamlessly and nobody is cheated or faulted. So as an investor, you don't want to be fooled, and as a company, they don't want to be fooled as well, right? So this regulator in India is the Security and Exchange Board of India, SEBI. So they make sure that the transactions happen seamlessly, and if there are any kind of defaults or any kind of issues, then this regulator comes into picture and make sure everything is in law and order, right? So now that you have understood what exactly is the stock market and why it exists, now let's understand what are the two types of analysis that one can do when it comes to analyzing the stock market or the stock prices. There are basically two types of analysis that one can do. The first one being fundamental analysis, and the second one is technical analysis. In fact, most people watching this video are only going to watch the video, but I would highly recommend that you can take down notes so that you can also manage a book where you can completely write down about these things along with me so that you can also understand. And we have seen in the past that it is scientifically proven that if you just watch a video, the retention rate is very, very less. But whereas if you write along with learning, then your retention rate becomes even more higher, right? So make sure that you're making the best use of this time by writing down whatever I'm sharing with you. So there are two types of analysis that one can do. One is the fundamental analysis and one is the technical analysis. Now let me explain what exactly is fundamental analysis. It is basically the analysis of stock prices using the fundamentals of a company by analyzing their balance sheets, their profit and loss reports, and all of these other management activities. But whereas technical analysis is where you're analyzing the historical data of this specific stock, how it moved in the past, what are the patterns found by its charts, indicators, and a lot of other data. So fundamental analysis is going to give you a long-term perspective as to whether a stock is going to perform well or not, whereas a technical analysis is going to give you better insights when it comes to short-term movements of the stock prices. Let me give you an example. Let's say the management of this company XYZ was doing tremendously well in the past, and their quarter-on-quarter profit and loss reports was also showing the same. It had really good profits going forward. But at one point of time, the management had to change, and the management got acquired by a different company, or the management just got changed. And this time the management who came in was not that well versed or was not that good. So now what happened? The results of this company started going down. So automatically on the long term, the stock prices start falling. So this is the fundamental analysis, and it is going to help you in the long-term investments. But whereas if you want to do trading, like where you're going to trade only for a few days or a few minutes, then technical analysis is going to help you even better. So technical analysis is basically the analysis of stock prices and data points. So how many people have bought it, what are the volumes traded, in different time frames, and all of these things. So in the further video series, we're going to get into the depths of it one after the other. But for now, understand that fundamentals is basically looking at balance sheets, I'll put it as BS, and profit and loss reports, and probably management activities, expansions, etc. And at the same time, technical analysis is basically based on data, right? So that comes to the end of the second part, that is, what are the two types of analysis that one can do when it comes to the stock prices analysis. Now let's go to the third part and the interesting part. What are the different types of trading that one can do when it comes to the stock market? Now there's a clear distinction that one needs to understand about this. Investments and trading are two different things. Investment is where you're going to buy a stock and hold it for a very, very long period of time, and you might sell it probably after 7 or 10 years, or you might never sell it. You're holding this specific stock because you want to make money out of it in the long run, and along with that, you might also receive a few dividends if the company gives it, right? So what are the different types of trading or investments that one can do when it comes to the stock market? So in simple terms, there are three things that you can do. One is you can do investments, well, like I mentioned, where you're going to buy a stock and hold it for a very, very long period of time. The second thing that you can do is something called as swing trading, and the third is called intraday. There's a fourth category as well. It is called BTST. So when it comes to the first category, let's talk about the first category again. So when it comes to the investments, you're going to do long-term investments. So basically, you're looking for the value of the underlying stock itself to go very, very high so that you can make a profit. So let's say you bought these shares at 10 rupees in our earlier example, and now the valuation of the company went to 2000 crores. So automatically, from 1000 crores valuation, now if the company goes to 2000 crores valuation, then the price which was at 10 rupees in simple terms would have gone to 20 rupees. So now we are making a profit of 10 rupees on this share, on a single share, right? So that's how long-term investment works. Now, what is swing trading? Swing trading is buying and holding a stock for a few days or a few weeks. So you do analysis of the stock market prices and you try to gauge what is going to happen. You have a view that the market is going to go up in the next few days. Then in that moment, you're going to buy it, and for the next few days, you're going to hold, and then you're going to sell it. And if it goes above the price that you bought, then you're going to be in a profit. But if the price of this stock comes down than what you bought, then you're going to make a loss. So this is swing trading. The third thing is intraday trading. So this is where you're going to buy and sell stocks on the same day, which means your trades are going to last only for a few minutes. You're going to buy at 12 o'clock and by 12:30 you're already out. Or maybe at 12 o'clock you buy, 12:02 you're out. So this is a bit of high frequency, and it has to be done by, with utmost care and guide. You have to learn about it and then only do it. If you randomly go into the markets and start doing intraday trading just because you saw that, okay, the markets are moving and let me just try buying or selling, then you're going to get into deep trouble, right? So it's recommended that you have professional guidance whenever you do intraday trading. The first thing is BTST, which also stands for buy today and sell tomorrow, which means you're going to buy the previous day and sell on the next day. So these are the 4 types of trading that one can do in the Indian stock market. So which means you can do long term, you can do medium term, and you can do ultra short term as well. So hope you enjoyed this video, and I'm going to look forward to covering more concepts in the next video. Please do subscribe to our channel so that you get more such insights regarding the Indian stock market. Thank you, and I'm going to see you in the next video.